Hello everyone. Today we are going to talk about cost, volume, and profit analysis. And this is our chapter plan. First, we are going to learn the basic concept of cost, volume, and profit analysis. Then we are going to talk about the contribution margin ratio, break-even point in sales in dollar, and the break-even point in units. Then we are going to talk about the target profit analysis, and finally, margin of safety. So these are the topics that we are going to cover under CVP analysis. So first, you can see what is the meaning of cost, volume, and profit analysis. So we have three elements here: cost, then volume, and the profit. So these are the three elements under CVP analysis: cost, volume, and the profit analysis. And you know that based on our second chapter, we already learned that we have two types of cost. We have variable cost and we have fixed costs, right? We already learned this. We have variable cost and fixed cost, and they have different characteristics. They have different behavior. Then volume means the quantity of units sold. Okay, so volume is the quantity. You may sell 1,000 quantity, you may sell 2,000 quantity, or you may sell 5,000 quantity. So this is the quantity company sell. Okay, number of units of product company sell. So this is mean the volume. And what is the profit? So how to calculate the profit? We have a formula. We have a formula to calculate the profit. It is sales minus, we have variable cost, then minus fixed cost. So sales minus variable cost equal fixed cost. Okay, sales minus variable minus fixed equal profit. So these are the three elements of cost profit analysis. Now, why we need the cost volume profit analysis? Because managers want to know how profits will change, how the profits will change. So this is important. As a manager, you want to know whether your profit will increase or profit will decrease, or no profit no loss. So as a manager, you may have this question in your mind, whether you will have higher profit, whether you will have lower profit, or whether you will have no profit, no loss. If you have this question in your mind, and if you want to know this, okay, then cost, volume, and profit will help you to do this. And this kind of profit is related with units sold. This kind of profit is related with units sold. Sometimes you may sell 1,000 units, or sometimes you can sell 5,000 units. That means units sold is changing. Units sold also changes. So if you, for example, sometimes we find that if we sell more units, we may have more profit, okay? Or if we sell less unit, we may have less profit, something like this. So as a manager, if you want to know whether your profit increase, decrease, or no change, then it's related with how many units you are going to sell. Okay, so this kind of questions and answer you will get from CVP analysis. And you should know that we should have two types of cost: variable cost and fixed cost. And we should know this equation: profit equals sales minus variable cost equal fixed cost. Now we are going to talk about the second part, contribution margin ratio. Contribution margin ratio. So if we want to know the contribution margin ratio, you should know this relationship. You should know the relationship. So here, net operating income means profit. And we already know what is the formula of profit. What is the formula of profit here? The profit equal, okay? Profit equals sales minus variable cost, right? Sales minus variable cost minus fixed cost. Here you can see here, this is sales. This is sales. Then minus variable cost. Sales minus variable cost. Okay, sales minus variable cost equal contribution margin. So this is the new point you have to remember. So sales minus variable cost equal, it is called contribution margin, CM. In short, it is called CM. So here, sales minus variable cost equal, we find it is CM. Do you understand? Sales minus variable cost equal contribution margin up to here. Up to here, sales minus variable cost equal contribution margin. So from contribution margin, we are going to deduct fixed cost. We are going to deduct the fixed cost. Like here, contribution margin we calculated contribution margin minus fixed cost equal profit. Like here, minus fixed cost equal, we have profit. So this formula is very, very important for this chapter. This formula is very, very important for this chapter. You must remember this by your heart. Okay, this one. Sales minus variable cost equal contribution margin minus fixed cost equal profit. So this is the main formula in this chapter. Okay, and anyway, you have to remember this. Okay. Now, if you remember this, then based on this concept, you have to calculate contribution margin. So contribution margin means CM. I told you that you should know how to calculate contribution margin, and I already tell you the formula. This is the formula. Sales minus variable cost equals CM, right? So I also mentioned the formula here. Sales minus variable cost. Sales minus variable cost equal contribution margin. So sometimes I will write CM. So whenever I will write CM, it is contribution margin. Now we have to calculate CM ratio. First, you should know how to calculate CM. Okay, first you have to know how to calculate CM. Then you have to know how to calculate CM ratio. CM ratio means CM percentage. Ratio means percentage. Contribution margin ratio. Contribution margin ratio means contribution margin percentage. Okay. Now how to calculate this? So we already know how to calculate contribution margin. So first you have to calculate contribution margin ratio equal. So contribution margin ratio equal. First we calculate CM. Okay, we calculate contribution margin. After calculating contribution margin divided by sales. So sales is given. Look at here. Sales is $100,000. Okay, so here sales is $100,000 like this. For example, sales is $100,000, and here we already know the contribution margin. Contribution margin is $40,000. Contribution margin is $40,000. So contribution margin contribution margin divided by sales. Okay, will give you CM ratio. Okay, will give you CM ratio. So we already know how to calculate CM, how to calculate CM ratio. We already know this CM ratio. Then we are going to calculate variable cost ratio. This is called variable cost percentage. Variable cost percentage. Variable cost percentage. So the formula is variable expense ratio equal variable expense or variable cost. You can write variable cost also, no problem. Variable cost ratio expense and cost similar. So variable cost ratio equal variable cost divided by sales. Variable cost divided by sales. So here you can see that we have variable cost is given here. Variable cost $60,000. Variable cost $60,000, right? Divided by sales. Sales is given $100,000. So by applying this formula, you can calculate the variable cost ratio. Okay. Then we can calculate the sales ratio. Sales ratio means sales percentage. Sales percentage. And this is the formula, sales divided by sales. Sales divided by sales is the okay. So it is 100%. You can see that 100%. This is 60%. And this is 40%. So we calculate CM ratio 40%. CM ratio 40%, variable cost ratio 60%, and the sales is 100%. Sales is 100%. So up to here, we already know how to calculate CM, right? How to calculate CM. So here, selling is $100,000. Sales minus variable cost is $60,000. Okay, sales minus variable cost is $60,000 equal is $40,000. So this is CM contribution margin. So we calculate contribution margin. We calculate contribution margin ratio. We calculate variable cost ratio. We calculate the sales ratio. This is the formula, right? Now you should know how to calculate per unit. How to calculate the per unit. So selling price per unit equals sales divided by quantity sold. So if you want to calculate, per unit selling price, the formula is sales. Already we know that sales is $100,000. Sales is $100,000, and how many quantity we sell according to this question we don't know. Okay, this number is not given. So variable expense is given. Variable expense is given $60,000. Okay, so this is the formula. The variable cost is $60,000. $60,000, and contribution margin equal, this is $40,000. $40,000. So this is given in the question. Sales is given in the question. Look at here. Then variable cost given in the question, and the contribution margin given in the question. So if we want to calculate the per unit, if you want to calculate the per unit, we should divide the quantity sold. So here quantity sold is common for every cases. So sales divided by quantity sold, variable cost divided by quantity sold, contribution margin divided by quantity sold. So if we do this, we can calculate the per unit. Now, based on this formula, if I ask you this question, for example, I ask you to fill this missing number. Okay, I give you sales. Look at it, sales is given, right? Sales is given $250,000. This is the quantity sold. This is the quantity sold 500, right? So here, look at here, quantity sold means it is 500. For example, 500, quantity sold 500, quantity sold 500. So we find quantity sold. We need variable cost according to this question. According to this question, variable cost is $150,000. Variable cost according to this question, 150. According to this question, what is the contribution margin? Can you remember the formula? Contribution margin, sales minus variable cost equal contribution margin, right? $100,000. So $100,000. Yes, and sales here is $250,000. Sales is $250,000. So if we do this, we can easily fill this part. That means if we want to know per unit sales, okay? If you want to know per unit sales, if you want to know per unit variable cost, if you want to know per unit contribution margin, then this is the formula. Look, this is the quantity sold is common, right? Quantity sold 500 is fixed. Here, quantity sold is given 500. Now formula said that sales divided by quantity sell equal per unit sales. This is variable cost divided by quantity sold, contribution margin divided by quantity sold. Then we can get this number, right? We can get this number. And I already told you that how to calculate the percentage. How to calculate this percentage, I already tell you. Can you remember the formula? If you want to calculate sales ratio, the formula is sales divided by sales, right? If you want to calculate variable cost ratio, variable cost divided by sales. If you want to calculate contribution margin ratio, contribution margin divided by sales. This is the formula given. This is the formula. Yes, this is the formula, right? Now, if you understand this calculation, and this is information. So here, I repeat again, this is your question maybe. If this is the question, based on the previous explanation, we can easily calculate contribution margin, right? Sales minus variable cost equal contribution margin. Contribution margin minus fixed cost equal profit. So we already calculate profit. We already calculate contribution margin. Now we can calculate per unit sales, per unit variable cost, per unit contribution margin. We can sell sales ratio, contribution margin ratio, variable cost ratio, and this is the solution. Right? This is the solution. So this calculation is very, very important, because in your exam question, sometimes you need to get this missing number. Okay. So up to here, it is very, very important to know how to calculate contribution margin, how to calculate profit, okay, how to calculate per unit sales, how to calculate per unit variable cost, how to calculate per unit CM. Okay, so in future, I mean, very soon you will see that these two numbers are really very, very important. These two numbers. Per unit contribution margin, okay, per unit contribution margin ratio, and the contribution margin. So these three numbers are very, very important for this chapter. What is the amount of contribution margin? What is the per unit contribution margin? What is the contribution margin ratio? You should know how to calculate this very well. Now let's see. Now look at this question. If you understand my calculation already. For example, this number is not given. This number is not given. This number is not given. Okay. Contribution margin not given here. This is also not a very important part anyway. But this is not given. Question give you sales for 15,800. Question give you quantity sold, right? Question tell you the variable cost. Question tell you the fixed cost. And if this is the case, so okay, maybe question will give you the profit. Yes. Question also give you the profit, for example. Question give you the profit. Okay, so these are the given. So this 27,500, you have profit when you sell how many units? When you sell 6,300 units, right? So when you sell 6,300 units, you have profit. You have profit $27,500. Now question tell you, if you sell 6,100 units, okay? If you sell 6,100 units, what is your profit? What is your income? This is the question. Do you understand the question? So currently you are earning 27,500 if you sell 6,300 units. Now you are going to sell something less, right? If you sell 6,100 units, which one is your profit now? Which one is profit? Now to answer this question, okay, so we should know this one. Our question said that what is the profit? What is the profit if we sell 6,100 units? So to do so, okay, we need this column. We need to know what is the per unit sales, okay? Then we should know what is the per unit variable cost. We should know what is the per unit contribution margin. Okay, then we can get the answer of this question. Because, and this is the solution. If you don't have the solution, you can take a picture. So this is the answer. So we calculate the per unit. And this question, although we don't need this information, but you can calculate this. But to answer this question, we need these three information: per unit sales, per unit variable cost, per unit contribution margin. Because how many units we sell here? We sell here 6,100 units. So for this 6,100 units, okay, this is the sales, this is the variable cost, and this is the contribution margin. And look at this one, fixed cost is fixed. If you remember my last class, in the last class, we explained that, okay, last class we explained that. So you sell, the number of units doesn't matter, fixed cost is always fixed. Remember? If you remember our last class, whether you, last class I told you that you have one phone call, but you have to pay $100. If you have 10 phone call, also you have to pay $100, right? So this number is fixed within a relevant range. Okay, so whether you sell 6,600 units, whether you sell 6,100 units, fixed cost is fixed. So these two numbers fixed, and we calculate sales price, we calculate variable cost, we calculate contribution margin based on this per unit, right? Based on this per unit. So our answer is this one. Our answer is 23,500. This is the answer. Although in the exam, I am not going to ask you any multiple choice question. I can give you up to here, and I can tell you calculate the operating income. Okay. So then you have to do this way. Do this way. Now, next topic is about break-even points. So break-even, what is the meaning of break-even? Actually, I already told you that break-even means no profit, no loss. So we have to find a point. At that point, we do not have any profit, we do not have any loss. And these are the several formulas, okay, to make sure that we have no profit, no loss. Look at here. First, when net operating income equal to 0, that means profit equals $0. If your profit equals $0, it means that you don't have any profit and you don't have any loss, right? Clear? So when profit equals $0, it is called break even. Another formula. Revenue and cost, these two numbers are similar. For example, revenue $10,000 minus cost also $10,000. So if these two numbers are similar, revenue and cost are similar, it is called break even. So you can define break even in several ways. Okay, profit equals 0 is break even, then cost and revenue same amount, it is break even, and we have and we already know that. We already know this. How to calculate profit? Can you remember how to calculate profit? Sales minus variable cost minus fixed cost, right? This one, I will explain that profit. This one, sales minus variable cost minus fixed cost equal profit. If it is 0, it is also called break even. It is also called break even. So sales minus variable cost minus fixed cost equals $0. So $0, it is also break even. We can define break even in another formula, contribution margin. Look at here, contribution margin equal fixed cost. Contribution margin equal fixed cost. So in this chapter, although we have several formula, look at here, although we have several formula, right, to check whether we have break even or not, but in this chapter we are only going to use this one, contribution margin equal fixed cost. So this, if you remember this, then this chapter is very easy to solve the break even part. Do you understand? So you no need to remember revenue minus cost, you no need to remember sales minus variable cost minus fixed cost equals 0. Just remember only up to this. Contribution margin, okay? Contribution margin equal fixed cost. For example, our contribution margin $80,000. Our contribution margin $80,000 equal our fixed cost also $80,000. If this is the case, that means it is called break even. Just remember only this formula. Okay. Look at here. Look at these two numbers. So this is CM. This is CM and this is fixed cost. This is fixed cost, and these two numbers are the similar. When these two numbers are the similar, then it is 0. Okay, it is 0. 0 means break even point. Clear? Now in the question, I may ask you, look at this number. At this moment, if you sell, look at here, at this moment, if you sell 400 bikes, you have 0 profit, right? Clear? So for example, in the exam question, you don't know this number. I make a question mark here. Do you understand? Before you know, I repeat again, before you know that this is 400, right? But I delete this number. I delete this number and I ask you a question. How many units you have to sell? Okay. How many units you have to sell to have a break-even point? Clear? Then, for example, I can, at this moment, you know that if you sell $200,000, okay? If you sell $200,000, you have no profit, no loss. Then I can change this number as a question mark. As a question mark. So here I have unit question mark. I can ask you how many units you have to sell. Look at here. I can ask you how many units you have to sell, or I can ask you how many dollar, okay? How many dollar amount of sale. This is the question I may ask you in the exam. Clear? Now, I told you that to find the break even, which two elements we are going to use? We are going to use these two elements, CM and fixed cost, right? Now, we are going to use these two elements. We are going to use these two elements to calculate unit, okay, or to calculate dollar. Look at the formula. Look at the formula. First we are going to know how many units we need to sell. How many units we need to sell to find a break even. And this is the formula. Formula is fixed cost. Look at it, because I told you that. Just remember these two. Just remember these two, fixed cost and CM. Okay. So the formula is fixed cost divided by, as we are looking for unit, right? As we are looking for unit, it is CM unit. So the formula is fixed cost. Fixed cost is common. Okay. Fixed cost is common. If you want to know unit, okay. If you want to know unit, then it is CM unit. So the formula is fixed cost divided by CM unit. Clear? If I want to know dollar amount, okay. If I want to know dollar amount, the formula is, look at here. The formula is fixed cost divided by CM ratio. Why CM ratio? Can you remember what is the meaning of percentage? How we calculate percentage? Divided by sales, right? Divided by sales. So if you want to know dollar amount, look at here. If you want to know dollar amount, dollar sales. If you want to know dollar sales, then the formula is fixed cost divided by CM ratio, right? Because ratio is calculated from sales. If you want to know unit, look at here. If you want to know unit, then the formula is fixed cost divided by CM unit. That means the break even belongs here. Break even belongs these two components, fixed cost and CM, right? So you no need to remember other formula, just remember these two, CM and fixed cost. To formula, fixed cost divided by unit CM, fixed cost divided by CM percentage. Now, if this is the case, you can easily calculate now this number. Because question tell you fixed cost, this is fixed cost. Question give us fixed cost, right? This is fixed cost. Clear? And we need CM unit, right? If this is not given here, look at here. If this number is not given, I told you that in the exam you have to calculate this. If this two number is not given, you have to calculate this. So the fixed cost is given. So for unit, we have to calculate CM unit, right? Do you know how to calculate CM unit? I already explained, right? How to calculate CM ratio, I already explained. Just divide by CM unit. divided by CM ratio. And I told you that if you check your documents, the answer is 400 units. Can you remember? If you sell 400 units, like here, if you sell 400 units, then you have break even, right? Then if you sell $200,000, then you have break even. So do you understand how to calculate the break even? So if you understand, now you can see this question. You can see this question. Again, I may not give you this number. Okay, I may not give you this number. You have to calculate this. So sales $50,000. So if this company at this moment the company sell how many units? At this moment, company sell 1,000 units. Okay, and they have how many profit? They have 3,500 profit. Clear? They sell 1,000 units. They sell 1,000 units, and this is their profit, right? This is their profit. Now, question give you variable cost. You have to calculate the contribution margin. So from here, question asks you how many units. Look at here. Question asks you how many units to have a break-even point. Look at it up to here. Calculate break-even point in units. That means we are looking for this number. So here you have to calculate. CM unit. Here you have to calculate CM. So how to calculate CM unit? First you have to calculate CM contribution margin. Sales, right? Minus variable cost equal contribution margin. Clear? Right? Sales minus variable cost equal contribution margin. Contribution margin divided by quantity sold. Contribution margin divided by quantity sold equals CM unit, right? So first, this is the hints. That means to solve this question, we have to calculate CM. And how to calculate CM? Sales minus variable cost. Then we have to calculate CM unit. How to do this? It is CM, okay? CM divided by quantity sales. So we need, because the question give us fixed cost, right? What was the formula? Can you remember the formula? Formula is fixed cost divided by CM unit, right? Now question already give you the fixed cost. Look at the solution now. Question give us fixed cost. $1,400,000 is given. $14,000 is given. This is the fixed cost. Now we calculate CM unit, right? We calculate CM unit. So this is you calculate. And we get that 800 units. So if we sell 800 units, then we have no profit, no loss, right? We have no profit, no loss, and this is the answer. So do you understand? The same question I can ask you, what is the amount of sales dollar? Okay, what is the amount of sales dollar? Then what is the formula? Formula is unit fixed cost divided by CM ratio. That means if I ask you another question, so another question is dollar amount, dollar sales. Okay, what is the dollar sales to find the break even? So the formula is fixed cost divided by CM ratio. Right? So this is very, very important to know how to calculate CM contribution margin in unit. My mistake. break even in units, break even in units, and break even in sales dollar. So in the exam question, I may ask you this. What is the amount of how many units you have to sell to have a break-even point? How many dollar amounts you have to sell to have a break-even point? Okay. Then let's move on to the another topic called the target profit analysis. So if you want, what is the meaning of target profit? Target profit is you can target your achievement. For example, you are a manager, you think that coming year I want to earn $100,000, or I want to earn $200,000, or I want to earn $500,000. This is your target, right? As a manager. So if you have a target, then how many units you have to sell? Or how many dollar amount you have to sell to achieve the target profit? So if you find any question about the target profit, okay, first we have to make sure our break even. Look at the formula first. Can you remember the formula? Fixed cost divided by CM. If you are up to here, you know your break even, right? Do you understand? Can you remember this formula? Fixed cost divided by CM unit is break even, right? Zero. Now after making zero, you are going to add your target profit. Clear? So the target profit formula in case of quantity, look at here. Target profit formula in case of quantity, the formula is target profit plus fixed cost divided by CM unit, right? So up to here, you can see that up to here it is break even, right? Up to here it is break even. Now you add your target profit. So this is about quantity. What about sales? So if it is sales, it is not CM unit, it is CM percentage. Again, this is the equilibrium break even, then we add our target profit. So do you understand the formula? Target profit formula. First, break even plus target profit, right? Break even plus target profit. So the formula is target profit plus fixed cost divided by unit CM for unit, and unit CM percentage for the sales dollar. Now look at this question. Okay, look at the formula first here. I explain this formula first. So if we want to know quantity sales, so suppose that, so we know fixed cost is given. Fixed cost is given $80,000, right? Fixed cost is given $80,000, and this information may not, these two information may not be given. These two information, look at here. I delete this. I delete these two. These two information may not be given. Because according to this formula, we should have fixed cost, right? We should have fixed cost, we should have per unit CM, and we should have CM ratio, right? Now, question said that your target profit, look, your target profit is how much? Your target profit is $100,000. If your target profit is $100,000, how many units you have to sell? This is the question mark. This is your first question. How many quantity you have to sell? Okay, if your target profit is $100,000. Do you understand the question? Your target profit is $100,000, right? Then how many units you have to sell? So what is the formula? Formula is target profit plus fixed cost divided by CM unit, right? CM unit. So we should calculate CM unit. What is the amount of CM unit? CM unit is $200, right? And what is the percentage of CM? Percentage is 40%. So you should calculate this. Now the formula is target profit is $100,000 plus fixed cost $80,000 divided by CM unit, right? Because our first question is calculate quantity sell. So if you sell 900 units, then you can earn $100,000. Clear? If you sell 900 units, then you can earn $100,000 profit. Now the second question said that we want to know the sales dollar amount, dollar sales. We want to know the dollar sales, not the unit. We don't want to know the unit. We want to know how many dollar amount we have to sell. The formula is same formula, just divided by CM ratio. Okay. And if you sell $450,000, then you can achieve or earn $100,000 target profit. Okay. Now you can solve this question. Again, this number may not be given. And as this number is not given, you have to calculate CM unit, or you have to calculate CM ratio based on the question, or both. Or you have to calculate both. It depends on the question. If question asks you unit, here question asks you unit, right? Question asks you unit. How many units you have to sell to if your target profit is this amount? So your target profit is to earn $35,016, right? Then how many units you have to sell? Then you have to calculate CM. You have to calculate CM, and you have to calculate CM unit. So these two numbers important for this question. If this question asks you, how many units and how many dollar amount of sales, then you have to calculate the CM ratio also. Okay. And this is the formula. You know that we are going to calculate the quantity. So formula is target profit. We already know our target profit. We are going to add our fixed cost. Fixed cost is given in the question. This is the fixed cost given in the question. So target profit plus fixed cost divided by CM unit. CM unit. So the number is, if you sell this amount, 6,794 units, then we can earn our target profit, this one. So this is the answer. This is the answer. Clear? So this is about how to calculate the target profit. Sorry, how to calculate the targeted quantity of sales and targeted sales amount to if we have any target profit. Now the last topic is called margin of safety. So what is the meaning of safety? Safety means you are safe, right? So when you are safe, actually, if your sale is above the break even, because break even means you don't have any profit, you don't have any loss, right? Now, if you can sell more than your break even, it means that you are quite safe. So margin of safety means you are going to sell something that is above the break even. Okay, so look at the formula. Margin of safety equal, okay, actual sales or budgeted sales, okay, actual sales or budgeted sales minus break even sales. Clear? Actual sales or budgeted sales minus break even sales. So what should we do first? In this question, we should calculate break even first. We should calculate break even sales first, because question will give you actual sales, or question will give you the budgeted sales. So this part already given in the question. So you have to calculate break even sales. Now how to calculate break even sales? Can you remember the formula? This is the formula. Break even sales. This is the formula of break even sales. Fixed cost divided by CM ratio, right? Yes. So margin of safety means actual sales minus break even sales. And can you remember, if I ask you to calculate margin of safety percentage, Here, if I ask you to calculate margin of safety percentage, can you remember how to calculate percentage? It is margin of safety divided by sales. Remember how to calculate CM ratio, how to calculate variable cost ratio, everything is divided by sales, right? Same margin of safety percentage. If I ask you to calculate percentage, it is margin of safety that we already calculated here, right? We already calculated margin of safety, then divided by sales. Divided by sales equal percentage. Clear? Now this is your question. This is your question. We don't know this number, but we should know how, at least this two number is important. This two number is important. What is the contribution margin per unit? What is the contribution margin ratio? And this number is important, fixed cost, because first we have to calculate the break even, right? Break even. And what is the formula of break even? Fixed cost, right? Divided by CM ratio. Then we can get break even sales, right? And what is the formula of margin of safety? Margin of safety means actual sales. This is the actual sales. Actual sales minus break even sales. So first you have to calculate. We have to calculate break even sales. Break even sales is this is the amount. Break even sales means fixed cost divided by CM ratio. And how to calculate the margin of safety? Margin of safety means actual sales minus break even sales. And this is the margin of safety. So first we calculate. We calculate break even sales. Then we calculate margin of safety. And percentage, what is the formula of percentage? Can you remember? This is the formula of percentage. Margin of safety divided by sales, right? Margin of safety divided by sales. This is the formula. This is the formula. Margin of safety divided by sales. We already calculate margin of safety. This is 35,500. Okay. Then sales is given $270,000. Sales is given $270,000. And the answer is 13.15%. 13.15%. So here we calculate margin of safety. Again, we calculate break even and we calculate the margin of safety percentage.